It's August 1st, 2014. Current time is 14:42 GMT. Jay Meisler here from the Global Traders Association with a look ahead to August trading. This is part of our monthly, in this case, August newsletter, Thoughts from the Forex Trenches. And before I go on, I want to discuss what's going on currently in the market. And what's currently going on in the market is a battle between those led by the bond vigilantes who see a need for higher or want to push the central banks to start normalizing policy and raising interest rates, and central banks such as the Fed and Bank of England who seem to be in no rush to do so. This is why the markets react and often overreact to economic news that shift interest rate expectations as to when they might start normalizing policy. We saw it this week. The sterling coming under pressure after a weak PMI report, and on Friday, that's today, and where U.S. had a mixed week, where we had very strong second quarter GDP, a dovish Fed, let's say a below consensus, although still relatively strong jobs report, and then an above consensus ISM PMI reading. So the key here is that in the jobs report, wages were the wage component was flat, and that gives the Fed cover to continue its policy. And this is why we go into the month of August with a hyper focus still on data, especially from the U.S. But it may be after these, especially after the jobs report, that the market's going to have to take a breather and spend a month in choppy consolidation. That's my thought right now, and if that's the case, we'll see if these U.S. dollar positions, the long positions that were set up, whether we see any sort of a squeeze. But in the meantime, that is going, that's where we stand as the market looks ahead to any signs that that supports the Fed's current dovish policy, or the market gets the upper hand by able to force the issue. Now, if you look at that, we also have geopolitics going on, and in that regard, Ukraine and the Israeli conflict don't seem to be going away anytime soon. But at the moment, they often play a background feature, although it does have an impact. At least it puts a cloud over the general global markets. Now, one thing about low volatility markets, if we continue into them in August, I wrote an article. It's the second part of this newsletter, 12 strategies that I use to trade a low volatility market, and I suggest you read it. Now, if we look at what's going on this past month, as you look, last month I pointed out here, it was the monthly trend line. It was on the verge of being broken. It was broken last month, and it comes in now around 135.03 this month. So that makes that 135 level pretty important. Now, if we look at the weekly chart, similarly, pointed out last month in my video that the weekly trend line was at risk. We did break it. We stayed below it this week, and we made a new low. In this regard, it crosses with the with what's now a downtrend line around 135.63 in 2 weeks, and at that point the downtrend line, if it stays intact, will take over. If we look on the daily chart, we've got a pretty well defined downtrend channel. Comes around 135.60, 135.35. I'm sorry, currently. And if you want to look at where the market is actually trading and where the targets are, they're pretty well defined. We broke, and we point these levels out, and most people looking at the same levels. 134.75 was the breakout on the downside. Target's 132.94 if it stays below it. If we go back above 134.75, then we can get, then 135 is going to exert itself as a magnet. And as I said, if there are any stops, they're probably closer to the up than the downside, so we'll see whether we get a squeeze in that regard. And now one more thing, if you look at the 4-hour chart, which I've been mentioning in my daily videos. The trend that we've had these consolidation patterns, followed by new, bracket new lows, followed by new lows. Another one here, another one here. Right now, this one is trying to take out this high. If it takes out 134.45, that kind of breaks the pattern, and that would at least signal some slowdown in momentum and be consistent with what I'm looking for, some choppy consolidation. So for the month ahead, for August, I would say we have to watch data. Next week is practically no data. Market is going to be thin. It's always thin during the month of August, and whether they could squeeze out some of those dollar longs remains to be seen. I guess you have to watch the bond market in that regard. 2.50% is the range, is the pivotal level there, although we've been in pretty much of a defined 2.44 to 2.66 range in bonds for some time. So during August, it's another data watching week, maybe another low volatility month, but you can't rule out chop, and we may see more of a choppy market as and depending on how extended positions are and whether dollar longs can hang in. So in this regard, I would watch 134.45 to 55 on the euro, as that protects 134.75. 130, if it stays between 133.50, 134.50, 134 is going to set the tone. And the reason I am discussing the euro is that it ultimately will set the dollar direction, even though other currencies, at different times will take the lead. So that's it for the moment. Good luck and good trading. Feel free to contact me with any questions, and as always, watch our articles that we post throughout the month, because we try to pass on our keen insights. So have a good month. As I said, watch out if we'll see if that choppy consolidation view that I'm feeling right now holds court, but much will depend on how the data unfolds during the month, as that's going to drive the bond market, and the bond market yields are probably going to drive the FX market.